All right, good morning, everyone. Let's get going. Apologize ahead of time if you hear any cursing. That's probably most likely going to be Neil Broad in the background swearing about the cricket. All right. Interesting session last night. One of the tightest ranges that we've seen in probably a month. We traded in a 4-point range in the S&P, and then literally in the last 15 minutes, it fell 5 points to obviously move out of that range, but just bombed out in the last 15 minutes. I don't know how the selling there. It didn't fall far enough that I think it's significant, but it does plant a little bit of nervousness in your head. When you start to look at the way that we finished, the fact that there were so many bullish things that were lining up yesterday and just couldn't quite get going. So we had a lot of commodities yesterday that traded very well. We had oil that traded well, pushing up to I think probably a couple-week high. We had gold, which is moving back up toward the 1,200 level, and we actually had copper, which was up 5% yesterday in the States. Interesting thing is, it just didn't really, it didn't get things really cooking in terms of, in the oil stocks or some of the likes of those shares. And we did have Billiton's that traded really well in London, but outside of that, the rest of the complex wasn't all that impressive. So, and especially following on the back of some of the big moves we saw, like the key reversal out of Anglos on Friday and that sort of thing. So, all right, we move into the Asian session. We saw Shanghai get hit pretty hard. Had some flash PMI numbers out of China showing the first contraction, I think, in 11 months on that number. That's obviously put a damper on markets there, put a damper on some of the mining stocks in Australia. Australia managed to kind of hang in there, I think, as Billy's trading on the back of Australia, but we did have Rio that traded off substantially. So other than that, very little leadership going on in the Asian session. We look at our chart of the day. This is showing the median price to cash flow multiples for U.S. stocks. You can see here that we're starting to the median stock is trading at record high relative to valuations, which I think is obviously, it's one of these things that we've been talking about. There's a lot of these metrics that are starting to show that we're very expensive. You can look at things like the Case-Shiller valuation models, and there's just so many things that are throwing some alarm bells out there, but the market continues to run higher. Now, I've got a bit of a theory. I think now that there's just there's so many of these private companies that are starting to probably get closer and closer to IPOs, and they're going to be big IPOs. We're talking about a lot of billion-dollar startups out there, and I think once some of those start to come into the market, I think that's probably when we'll start to see a bit of a correction, because we'll have a lot more to throw the money at, if you get what I'm saying. So unless there's money coming out of a lot of these equity funds into some new listings, there's not a new home for them to go to, and I think that could be a bit of a catalyst to get some selling, but it doesn't look like there's any on the too near to horizon. All right, Capitec came out this morning. It's supposed to be out yesterday, I think, but it came out this morning. Headline earnings per share, 22.09. Looks like it was better than guidance, and obviously better than previous expectations out of Bloomberg. Revenue number also looks like a beat. Divvy also looked like a beat. So I think the Cinderella story continues there for Capitec and managing to do what Able couldn't. Okay, in terms of market data out today, we had Japanese manufacturing PMI soft there. Very soft relative to the expectations, I think, on the China manufacturing PMI HSBC number, which is probably a little bit more accurate. We also have the same PMI numbers coming out across the globe, Germany, the entire Eurozone. We're going to see it in the States as well. We've also got CPI numbers in the States. The CPI numbers, I think, are of heightened importance now. We're going to need to see those numbers stay in the positive territories in the States in order, I think, to have rate expectations continue to move higher. So just watch those when they come out later this afternoon. All right, let's get into the maps. The first thing we're going to look at this morning is the U.S. dollar ZAR. It's had a nice rally off of the top. The rand has. This is obviously dollar chart, so this is showing a correction in dollar terms. This is this beautiful breakout that we saw that we were all over. Really, we're seeing a correction down to major support. I think at these levels right around here, about 1187 is probably our number. I think we're going to need to see a little something to kind of help punch us through this. If we do get through this level, then I think we can kind of come in and test what's been a long-term trend line. We can back this all the way out to a 5-year here, and you can see a long-term trend line runs forever and ever and ever and ever, and it's been the most perfectly held trend support of all time. And that level comes in beautifully here around what I think is also horizontal trend support around 1140. So if we, like I said, if we do see us break through 1187 here, I think we're going to see 1140 on the cards. 1140, I think you can really get aggressive maybe to look at selling rands. All right, look at Standard Bank this morning. We showed this a few sessions ago. First of all, we had a little bit of an inverse head and shoulder breakout here. Let's just draw it like that. Okay, inverse head and shoulder breakout. There's a shoulder. There's a shoulder. Obviously the head in between there. So that was going to give us a target up to about 168. We're getting there. We broke out already now. I like it when stocks do this and they kind of break out and they put that little couple days of consolidation in here, and then we make our sprint. That's what happened yesterday. Starting to look. I mean, I think that the target, short-term target, has to be 168. I think a long-term target can probably be up closer to 173 in Standard Bank. All right, we'll look at MTN. I'll back it out a little bit here. I think MTN keeps giving us a hell of a lot of false moves. Obviously, we've had the divvy that's come out here now, but you can see here, if we don't continue to move, if we don't continue to hold up here, we could be in real danger of dropping out of what looks to be forming potentially a little bit of a bear flag here. 210, I think, is significant. For no other reason, just this little flag pattern here. I mean, this one's been so tricky to call just because there's been so many head fakes around these levels. I think yesterday, one of the biggest reasons, well, obviously we had 8 Rand and divvy that came out of that price, but I think one of the biggest reasons for the selling is because of the fact that Iran came out over the weekend, made some comments of the states, some death to the U.S. type comments of the states, and so it's looking less likely that they're going to come to an accord on the nuclear weapons agreement, which was going to take a lot of the sanctions off Iran, which would obviously be good for MTN with their Iranian operations. So I think that's probably one of the big reasons for selling there yesterday. All right, look at ARI here. Around 110, we're running into a little bit of resistance. We popped up to that intraday. You can see here, there's definitely, I think this is where we broke down from, or convincingly broke down from. These things are all they've got such, they've fallen so hard that that the bounce is going to be quite hard. At some point, it will be a great opportunity to short. It's just gauging what the right level is. So we want to see these things kind of maybe come into some sort of resistance and start to maybe move lower again before we sell them. And the last one we'll look at is Aspen. Aspen, I think everybody and the brother has been long in the stock over the last few sessions. I'm actually going to draw it more like that because I'm going to run it from the closes. Definitely looking a little bit head and shoulder-ish, at least with a weak right shoulder here, obviously. But just a bearish pattern, I think, and we definitely dropping, and we made new closing lows for multiple months here. And I think the problem is, reminds me very much of what happened in the Steinhoff Steinhoff rights issue that we saw, where all these guys got they bought all this cheap paper, and everyone was already in the position ahead of time as well. And then after that, it took a handful of days as the market started to soften. A lot of those holders, a lot of those guys that really piled in there, just had to absolutely exodus. And you get everybody on the same side of the boat, which is exactly what I think's happened here, especially a lot of short-term money. then it can get ugly. And I think that we're going to have to see a capitulation on the downside before this thing reverses to the upside. And that's it for today, guys. Good luck out there.